Cable looks certain to end the year in the red as a more hawkish Federal Reserve has meant the dollar has outperformed during the second half of 2021. Will 2022 see a similar pattern? Welcome to our market forecast videos here at Zenfinex. My name is Connor Woods and I'm the Senior Market Analyst at the company who provides to you analytical and educational content on most trading days. Now today's video is going to cover a GBPUSD forecast for 2022, and I'll make sure this video stays valid for many months so you can keep referring back to it throughout the next year. Enjoy. Okay then, so now as always with 2022 forecast, let's have a recap on 2021 first of all. Now the 2021 open price was 1.369 and currently is trading at around 1.3238. Now the pound has lost out to the dollar this year, but why is that? Well, to keep it simple, the overriding factor is that optimism around a global economic recovery from the pandemic has been heightened due to successful vaccination programs. Now, accommodative approach of monetary policy is also being adopted, but this won't be lasting too long. The Federal Reserve have therefore announced they're going to start their tapering program in 2022. This means cutting back on their asset purchases and adopting a more tighter approach. This is going to lead to an increase in interest rates, which ultimately increases the value of a currency. But will this dominance continue throughout 2022? Let's take a look. Now, we've just mentioned the Federal Reserve, so let's take a look at the dollar side of the story first. We've got the pound dollar, we're looking at the dollar side. On the face of it, the case for a strong dollar in 2022 seems really watertight at the moment. Economic growth is recovering quicker than most countries, inflation is at record highs, and the Federal Reserve has turned more hawkish. This should keep the dollar higher for the first few months of 2022, but then what? Europe, this is three factors I want to talk about here. First of all, Europe has never fully reopened from the pandemic. If or when they do, they will be making up ground on the US, and this reduces the global growth gap. Number two, inflation could easily cool down. Oil prices are already falling, which is a clear sign that is the case. And what does this mean as a result? It means a pivot towards a more dovish Fed, potentially in the second half of 2022. I guess the point here, because that's probably quite an unpopular opinion, I guess the point here is not to get too carried away with what is happening right now and expect that to automatically filter through. Forex markets always fluctuate and they've never really had a solid long-term direction. So a pullback in the dollar next year is not as far away as people would think. There will come a time where all the rate hikes are priced in, and this could be the case come the summer months in 2022. Okay, so what about the pound story for 2022? To be honest, it doesn't look great either. There are growing rumours that the beginning of 2022 is going to bring more lockdown restrictions as the Omicron variant is picking up pace as I'm recording this video really. As traders saw from the previous lockdown, the pound suffered massively and it's unlikely to be on the same scale, but the growth prospects are not as strong as the US, hence the more dovish stance from the Bank of England. And on top of this, of course, investors can easily forget the ongoing concerns about the EU-UK post-Brexit trading relationships. This has been part to the side, almost as the world focuses on COVID really. However, this isn't actually going anywhere and it could limit the strength of the pound going forward. To conclude, my 2022 prediction for GBPUSD for cable sees the pound losing out to the dollar throughout the majority of the first half of 2022. However, the market could potentially price in too many interest rate hikes, and a shift to a more hawkish Federal Reserve in the second half of 2022 is going to be the pound's chance to gain some ground back. Let's take a look at the chart to mark all the key levels to watch out for. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Okay then, so here I am on the GBPUSD chart first of all, and as you can see, what I've done for you all, and I've just marked roughly around where that 2021 open price was. I think the main thing to suggest is that it's only really over the last, since really October, that we've seen GBPUSD really start to underperform. It actually started the year off on a really high note, and that goes back to what I said about Forex markets fluctuating, which is why when you look at a forecast for the year, it's important to say that, well, we know we're going to get troughs and peaks above and below where we think our prediction is going to be. And I do think that we're going to kick off the year potentially going down, and then in the second half of 2022, maybe some of those losses can be recovered. That's my prediction anyway. When you look at a technical analysis, on the RSI indicator down here, you can see actually that we're not at oversold territory, but you can see that the general direction is bearish, which is something we could see filter through. There is still some more wiggle room to the downside, but as you can see, when the market does reach those oversold territories, you can see we have had a significant bounce up from there. So I'm wary to see how much more downside we've got in this pair left. The very first level that I want to mark, which is really significant, is this 200. I'm on the weekly chart. This is a 200 weekly moving average, so really strong and potentially level of support. If we do get, and as you can see, we have actually wicked to this level already. If we do get a situation where price breaks below this 200 weekly moving average, then I see no reason why this market can't fall to something like this, around this 1.267 mark, which would probably be my take profit level, and where I think the market will head for the first maybe 6 months of 2022. Alternatively, what we might do is we might actually get a bounce of from this 200 weekly moving average, and then I think we're going to have to be careful and be patient on where we enter our trades from there. Let's move down onto the daily chart to see if we can mark anything that's a bit clearer in direction. So the very first thing that I would look at is there's several order blocks. As you can see, this price action here is quite difficult to trade off. We've just been on a grind to the downside. You can see there hasn't been many daily candles that have been significantly to the downside, but it's just been a bit of a grind and wicking either side. But what you can see is we have potentially this order block level here. I'll put that as an order block entry level. And the reason it's an order block is because this is the last piece of, if I zoom right in, because I'm not sure if you can see, this is the last piece of bullish power really, until we had this break of this structure low. So the most recent break of structure low. Okay, so this is going to have some bearing on, this is going to have some kind of resistance level as we approach this order block level. There are more as we go up. We think it'll be quite, I mean, we may have already mitigated that one there. So potentially we're looking at either that or looking at this level here. But I like this first level more. So I'm going to mark a selling trade from here, from this daily order block level. And first of all, you might want to target the lows, the first lot of lows we have here for a 5.4R. And if you want to hold a trade for actually the rest of the year, then maybe you can aim for around a 14 risk reward trade down around that 1.267 mark, which is where we've had previous support. And that would be a nice selling opportunity for GBPUSD that I've marked for you. From there, we might get that bounce, but as always, I'll give an update on this level as we go. The moving averages are suggesting that we are moving to the downside as well. And I don't really want to go any lower than the daily chart for you guys today, because this is a really long-term structure. So I'll give an update on this as I go. But this is the order block I like, and I'm also really paying attention to what's happening at this 200 weekly moving average. Are we going to get a break below? If we do, can we open up the doors to around 1.267? So that's it for GBPUSD. That's all the key technical levels to watch out for. I hope everyone's enjoyed this video. Make sure you've liked and subscribed to this channel, and you've dropped any comments in the comment section. We've got plenty more 2022 forecasts on the channel, and we've got some more recorded for you that are going to be coming out very soon. Actually going to be coming out this week. Other than that, I hope everyone has a great trading day today, and if you are watching this video, make sure you give it that thumbs up. Cheers.